I'm not saying that gold's going to 36,000 or 40,000. What I think you got to realize is that things swing in pendulums, and the stock market from that point to most recently swung dramatically 180 degrees, and things tend to swing back the other way as well. So I don't think there's a number that you can say that's too expensive for gold. It's relative to everything else that is happening. And the United States is also doing something about gold that we don't know yet. I never thought, David, in my career that I'd be talking about legitimately a $5,000 gold price. But I believe that's a legitimate possibility now. And that really, if we're at 5,000, that doesn't suggest to me that a lot of good things happen for the dollar or the bond market.
Gold's fundamentals are currently stronger than they've been in decades, rivaling the conditions seen during the 2001 and 2003 period when a similar macroeconomic environment prevailed. Recently, gold has been outperforming across multiple metrics against stocks, commodities, and major currencies, highlighting its growing role as a countercyclical asset. Widely known for his insights on economic trends, PeterGrandich admits that $5,000 of gold now seems realistic due to major market shifts. Such a development, he warns, would likely signal severe stress for the US dollar and bond markets. A critical historical observation until recently, gold had never experienced a secular bull market while the US dollar was simultaneously in a secular bull market. This pattern held remarkably consistent throughout market history, with secular bear markets in US stocks coinciding with secular dollar weakness and precious metals strength. In his analysis, Grandich believes the U.S. bond market has lost its safe haven status. While equity and commodity cycles typically run their course in 15 to 20 years, bond market secular trends can extend 30 to 40 years, creating unique interaction dynamics with historical trends in gold and silver investments amid central bank influences over different time frames. The gold-to-bonds ratio broke out in March 2024, reaching a 35-year high. Even more significantly, gold measured against 30-year bond prices broke out in late 2022, surpassing both the 2011 and 1980 peaks, two previous major gold bull market tops. Looking at the big picture, Grandich mentions major global developments with gold, positioning it for a bigger role in monetary systems. He points to groups like BRICS leading this shift, which could heavily impact bonds and financial markets. Gold is key in BRICS financial teamwork. By adding gold to their money systems, these countries are strengthening their finances and less vulnerable to currency swings. This move is part of a bigger plan to bring BRICS closer together economically. Before diving into PeterGrandich's sharp insights from his latest interview, hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I think what's happened is I think they lost their rightful place as the place to go. I think there'll still be money parked there. I think it will also be parked closer to more in the T-bill section. I think it's going to be more difficult to finance longer term debt than it will be shorter term debt. Now, understand this. Something has been transpiring, and maybe save this and see if in 6 or 12 months you pull it out that it was worth pulling out. Something has been transpiring with gold, not just here in the United States, but around the world, to be implemented in some way into monetary, whether it's just regional through BRICS or whatever. And that will play a big role then on what happens with bonds and so forth. And so the barometer to me is no longer, hey, like we used to be 20, 30 years ago, what's the dollar doing this morning? What's the long bond doing this morning? I think what a lot of people, even the don't worry, be happy crowd on Wall Street, will be asking in months, hey, what's gold doing this morning? And after, like I said, this corrective phase that was necessary and welcomed, I think gold will start work back to and even reach new highs. I never thought, David, in my career that I'd be talking about legitimately a $5,000 gold price. But I believe that's a legitimate possibility now. And that really, if we're at 5,000, that doesn't suggest to me that a lot of good things happen for the dollar or the bond market. When I entered the business 40-something years ago, the Dow Jones Industrial Average traded between 700 and 1,000 for 12 years. In the early 1980s, people were so bearish on the equity market that Business Week ran a famous magazine cover and said equities are dead. And a young man out of Gainesville, Georgia, that no one heard of beforehand came out named Robert Prechter Jr. and predicted 3,600 on the Dow. And he came up with this new relative technical analysis that no one knew about at the time either, called Elliott wave theory. And people scoffed. They laughed, even on the national financial networks at the time, which was basically just Wall Street Week on Channel 13, on public broadcasting. And of course, we ended up going much higher than 3,600. I'm not saying that gold's going to 36,000 or 40,000. What I think you got to realize is that things swing in pendulums, and the stock market from that point to most recently swung dramatically 180 degrees, and things tend to swing back the other way as well. So I don't think there's a number that you can say that's too expensive for gold. It's relative to everything else that is happening. And the United States is also doing something about gold that we don't know yet, but there's too many hints, especially from the Secretary Treasurer. I have a lot of respect for, by the way. I think he has a fairly sound mind, and I think the president would be better served listening more to him than Ludnick and a few of his other more hawkish kind of wild thinkers in his group. But he is continuing to speak about gold in a way that it would not surprise me that the United States is going to use gold somehow to better itself economically, whether it's just repricing it so it frees up opportunity to borrow more money, or introduce some sort of gold-backed bond in order to attract much bigger capital and not have to pay a lot of higher interest rates. But the gold market is just seeing the first leg of a huge bull market that needs a correction, but I still think someday the price will be a lot higher than 34 or 3,500.
In the interview, PeterGrandich believes the U.S. is losing its global leadership, with Trump's political strength fading. He favors markets in Asia over the United States, avoiding U.S. stocks and focusing on resources. Yet just 100 days into his second term, President Donald Trump's approach to foreign policy has rapidly reshaped this global order, dismantling the foundations of U.S. leadership in the world. President Trump has pushed away, or deliberately threatened, American allies and trade partners, leaving the United States more isolated on the world stage. Regarding a rare market occurrence, PeterGrandich notes that only gold surged despite stocks, bonds, and the dollar falling simultaneously. Despite a rapid price increase, central bank buying remains strong, and Grandich expects ongoing regular purchases for the foreseeable future. Over 2024 and 2025, the world has seen no shortage of uncertainty, and gold's price has reflected that. From the ongoing Russia-Ukraine war to tensions in the Middle East and China relations, 2024 was full of geopolitical flashpoints. Such uncertainty boosts gold's appeal. Let's get back to the interview.
I took a very bearish position after the election on the belief that a short-term rally would last on the enthusiasm of Trump, but come what I call Coronation Day, or everybody else called Inauguration Day, I thought he was taking too hard of a stance in his talk about trade, which he implied. I think it's backfired on him. I think the reason we're seeing this counter trend rally that is because people believe it's relief. It might not be as severe as it appeared a few days ago, but I think he lost a lot of political playing cards, not just on the trade front, but on other areas. So I'm not surprised, and maybe the volatility. I'll tell you the one big surprise after now my 42nd year. I never thought I'd turn in any given day and see a stock market down hard, the dollar down hard, and bonds down hard. And of course, gold was up a lot that day, because normally when the stock market has a bad day, either bonds or the dollar rally. And that did not happen. And I think that was a bigger signal that we need to focus on in the coming weeks and months, because there wasn't the normal safe haven attitude taken by people with money. And I think that's the changing of the guard. And I think it bodes well for gold after this correction that I've spoken about, which appears to finally be underway now in the gold market. Well, that's the signal again that the United States days of world leader, whatever terminology you want to use, is shrinking, if not gone. And the very fact that none of the countries of any size rushed and begged for forgiveness. And quite frankly, he caved. And there's another fallout from this, Dave. It's not going to be seen in a matter of hours or days, but in the coming weeks. And that's his political strength here. We're already seeing some of the strong MAGA supporters. Now, I'm neither a MAGA supporter or a Trump hater, so I'm not liked by either side. But one of the things we're already noticing is questioning not only this action on the trade, but other things that were spoken about that they feel he's not acting on. So he's lost playing cards in this. And no matter how it eventually settles here, I think this is beneficial to countries outside the U.S. and not to the U.S. And it's one of the reasons why I don't have any exposure to general U.S. stocks other than those related to resources, and why I still believe places like China, Asia, Singapore, some other countries, particularly in Asia, are more attractive to me than the United States is. Why have these central banks taken such a massive position and on top of it, repatriate their gold to the point of 33 or 34 different central banks? They don't have the ability to flip it to somebody and sell and lock in the profit. They're acquiring this gold for something that's going to be related to some change in monetary, whether it's regional or worldwide, and that's their reason. And so, and it's going to surprise people one day to realize that places like China hold a lot more gold than their noted reserves. And what was really interesting is, despite a move extremely fast from under 2,000 to 3,500, that central bank buying not only didn't dry up, it began to be even more constant and strong. So I think there's still a lot of room for the gold market, but it was so overbought and so in need of a healthy and necessary correction. But I think they'll be regular buyers for weeks, months, if not years in front of us.
Investor sentiment and market momentum have significantly pushed gold higher as gold outperformed other assets in 2024. Investment demand, including from ETFs and physical bar and coin buyers, surged. Momentum and fear of missing out further propelled prices. As economic uncertainties continue, do you believe gold will maintain its upward trajectory, or could another asset emerge as the new safe haven in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.